Last year, when we held our event in Kyoto, we had over 20,000 people show up. We are not still as big as places like Silicon Valley and Beijing, but we are way bigger. And in terms of growth rate, because our base was very small, somehow Berlin was enjoying this influx of talents, not just from Europe, but from Latin America. And really, it's a global melting pot. If Berlin could do it, I'm sure Tokyo can do the same.
Good morning, Akio-san.
Good morning.
Now it's Tuesday, May 20th, and you come with big news today. Maybe we should just start with that. And what is the news?
First of all, I'm Akio Tanaka, a partner at Headline Asia, and we have just closed our latest fund, Asia Fund 5. I'm very happy to break the news at this podcast. Thank you for inviting us, Norbert.
This is your fifth fund, which also means you've been one of the longest serving VCs in Japan. You've seen the ecosystem evolve. What is different, if anything, now with Fund 5 compared to when you started?
When we started back in 2008, 2009, ecosystem in Japan was very different from today. I think the way to describe it was tiny. We just didn't have as many startups we do today, and we didn't have as many VCs. The whole startup scene in Japan was very small, and especially this felt smaller because previously when I was running Adobe's international VC, I have met startup ecosystems in places like San Francisco, Silicon Valley, and Beijing. They were massive. Even back then, we were tracking like 20, 30, 40,000 startups in Beijing, and Tokyo was any fraction of it. But we felt there is an opportunity because Japan is still the fourth largest global economy in the world. As a consumer economy, it's very strong, but especially on things like mobile, like gaming, it still is a top market, consumer market. Against that opportunity, we didn't really have enough startups, enough VCs. One thing we decided to do way back is that we thought, okay, we need to grow this ecosystem so that we can invest along with it. As you might know, we have been running this event called IBS. And really, it started out as a concept which is probably closer to like offsite for founders. As an offsite, we always held it outside of Tokyo because if you have an offsite in Tokyo, people go home at night. And you don't have this mixing of founders and deals don't happen if people go home. So we consciously took everyone outside of Tokyo, usually far away enough that you cannot go back at home at night. We've been using Kyoto for a few years where we bring all the founders together and of course investors. Now we also bring a lot of other people who support the startup industry. But just to give you a good measurement, way back when we were first starting with IBS, our event had less than 100 people. That's how tiny this ecosystem was. But today, the last year when we held our event in Kyoto, we had over 20,000 people show up. We are not still as big as places like Silicon Valley and Beijing, but we are way bigger. And in terms of growth rate, because our base was very small, Japan probably grew fastest because others are already bigger. We're just catching up. Our fund basically followed this growth. Our fund size, of course, gotten bigger, but also the whole ecosystem and the thematic areas we support also have grown along the way. Maybe one good way to imagine this is side of the ecosystem that actually supported us in the beginning, as I said, was very small, but we are initially backed by a small number of tech public companies in Japan that were our original investors. I'm talking about people like Mixi, DNA, Green. They supported us from the beginning. They're the first batch of internet companies, especially on the back of mobile internet, when IPO and became big. So we see ourselves as industry-backed fund. Now we've grown with it. So that's a quick story on our history in Japan.
Great, thank you. Maybe leaving aside the first and the second fund, because it was very small, as you said, also the ecosystem. How has the size of the fund, the vintage, scaled from the third to the fourth, and now from the fourth to the fifth?
We started with 25 million fund in the beginning, and the last fund was 100, and the current fund is 145. So we have grown in size, but obviously this actually is reflective of the opportunities we see. First of all, Japan's Series A sizes are starting to catch up with international standard. Our Series A used to be like a seed round in China or US, but now still smaller than US Series A, but much bigger. So in order for us to play in the game, we have to also have a bigger check. Also, what has changed is that we do have significantly more follow-on round opportunities. And obviously, as a venture investor, we want to have enough dry powder to be able to do follow-on and double down basically on good investments. With that, we have to also expand the size. But reflecting this is growth of Japan's startups business scale. If you go back 10, 15 years ago, 100 million, 200 million IPO was considered big. But today, obviously, we're still not there in terms of top unicorn lands that we see globally, but relative IPO size for bigger companies have definitely become much bigger. Especially in the last decade, we have seen rise of companies like Mercari and Navi, two of which actually are portfolios. These companies kind of show, yes, you can start having serious size IPOs in Japan. And more significantly, these are the IPOs, especially as landscape started changing rapidly around free, where Japan IPO gets participated by international investors. I remember when it was free, something like half of the IPO subsequent, maybe over half, came from international players. That didn't happen in the earlier period in Japan. So we think Japan has finally reached its moment, and we hope it's a beginning of this interesting growth cycle for us.
In finance, the most expensive words are always "this time is different." And so when people start about an inflection point, you see the gray hair. I've got some history in Japan.
You've seen ups and downs here.
There's this graveyard of hedge funds that have bet against the Bank of Japan over the years. There are the people who have bet against this parent sub consolidation, which we actually might now finally be seeing. So I'm not quite buying the hype. I want to see some action first. Of course, as a venture capital investor, you have to be much more positive than that. What gives you the confidence to say this is now truly an inflection point?
There's a couple of things, and maybe I can use an example that might be a little bit familiar to you. This is back around year 2009-10, because Headline has 4 different regional funds, including one in Europe. I do remember visiting our Berlin office back then. At the time, there was emerging startups in Berlin, much smaller than it is today. One of the things I noticed is that our European team took me to a few startups, and they were typically run by, as you can imagine, Germans. So I saw German people running German startups, and their website, typically it was .de. They would do some domestic e-commerce or SNS or whatever for German economy, German business. Obviously, although these founders seemed very great, but their market size was too small. That kind of limited their growth. So back then, Germany didn't have as many unicorns. But today, Germany has more unicorns than Japan. And I started to see this change maybe 2015, 16, around then. I visited Berlin again. This time, every time I met a startup, it was very rare to see pure German teams. It was some kind of international mix of founders. They no longer had .de website. They all had .com. And in fact, in many cases, English was the first language on their website. They still had German versions of it, but basically they were, I would say, international first startups. Obviously, during that time, there were great startup experience being done with teams like Rocket Internet. That's when German and to some extent European founders realized, hey, they need to build international business to go big. Forget about .de, .fr websites. Let's just build .com companies. So that's what I saw. But I think there was something special about Berlin at the time. And I remember having some conversations with founders. They said, actually, among all of the European cities at the time, Berlin was cheapest. It was a go-to place for a lot of international talents and young people because it was more hip city than Paris. So somehow Berlin was enjoying this influx of talents, not just from Europe, but from Latin America. Really, it's a global melting pot. Out of that, really created this new generation of German startup scene that was no longer pure German. Now, fast forward, if you look at today, what do we have? For the longest time, Tokyo used to be one of the most expensive places in Asia, but now, partly to declining value of yen, Tokyo is now probably the cheapest big Asian city to live in. Singapore, Hong Kong, way more expensive. Even Taipei, if you look at real estate prices, way more expensive than Tokyo. Suddenly, Japan became this new Berlin, especially since COVID. There was an influx of tourists, but not just tourists. I'm seeing investors, entrepreneurs, and all sorts of people who make up our ecosystem of the venture now in Tokyo. Since COVID, we have about 2-3 startups whose founders were no longer pure Japanese, like a mixture of international founders and of course some Japanese founders. People are actually starting to build international business out of Japan. This is the beginning of this pivotal moment in Japan. Obviously, we're still early in this cycle, and we need to take a little bit more time for those businesses to mature. But if Berlin could do it, I'm sure Tokyo can do the same.
You mentioned Rocket Internet, which is obviously a huge commercial success. But
Yes.
if you look at it intellectually, they've copied what worked in the US and built the same brand in Europe, and they made lots of money with it. At the same time, it feels for me like the first generation of these Japanese companies, some of which you mentioned, the B2B SaaS companies, were also copies of what worked in the US. So by definition, there wouldn't be a global market for that because everything else is covered already. There's no white space. For us to really get to the global first companies, to get this decacon that everybody now seems to agree is needed to catalyze the environment, there needs to be a new idea. You got the new fund. What type of businesses are you looking for that kind of meet characteristics?
I'll give you maybe a couple of examples. In the latest fund, we invested in a company called Braid, and it's an AI company based in Tokyo, where the co-founders actually come from Europe. And they were AI experts who happened to be based in Japan for various personal reasons. The important thing is they decided to launch their startup in Tokyo. And what do? They are creating industrial AI that's used in product design and component design. It's actually not the same thing you can do with something like ChatGPT. You cannot ask ChatGPT to say, I need a more efficient blade design that takes care of XYZ physical requirements and ABC cost requirements and whatever regulations they may have to work with. These guys are actually experts both in AI, but also in physics and material science. Why is it relevant to be building this business in Japan? Japan is, first of all, is a land of big engineering manufacturing economy, works in Toyota, Honda, but also it's a global market. So this company is based in Japan, starting with Japanese enterprise manufacturing customers, but already starting to have businesses and early tractions with other manufacturing companies in Asia. And we believe this can be also work across the pond to United States, but also Germany, where we have this large pool of industrial companies. By the way, some of them are our European funds portfolio LPs. We have some of the German industrial companies as our limited partners. So we think there's actually potential synergy and have a story of international founders doing something out of Japan, taking advantage of its merit, and then going global. That's one example of that.
It's also a great example for what is investable in the AI space.
As an early stage fund, you don't invest in foundation models because that's a very different game. Obviously, we do have some local champions like Sakana, but really globally, you're looking at probably domination by mostly US, maybe some European or Chinese companies. But it's very difficult for, say, Japan to sustain global scale foundation model company. But in industrial application, I think there's a good opportunity here.
If you look at some of these AI-powered B2B SaaS type startups, they seem to be reaching a tremendous annual recurring revenue very quickly. But there's still the question, how quickly are they going to lose it again? Is it sustainable? Can they keep it up? We haven't had enough time elapsed to judge on that. But clearly, with the example you gave, there's deep industry expertise in it. So there's a bit of a moat.
Even for more SMB focused areas, there's actually good opportunity even within Japan. When I was at Adobe at Macromedia, we used to have some enterprise software that we sold to large corporates. In US and Japan, there was a huge divide. In US, whether it's Visa or those big financial institutions, we sold them directly because they have developers who can use our tools to implement solutions. In Japan, we never sold to the big guys directly because none of them had strong engineering department to implement. So we always work with system integrators. This is actually a common thread in Japan. Startups typically do not face competition from big corporates because they don't develop those solutions. And if they do, in conjunction with, say, big system integrators like IBM Japan, Fujitsu, and NEC, their cost base is 10x. So there's no way they can compete with startups. So we think there's actually a little bit more protective market that's in favor of startups in Japan. Then there's something else that's going on in Japan, which gives quite a bit of tailwind for such AI solution startup, is the lack of labor. Our population is aging, but more importantly, our workforce is shrinking. Across the board, Japan's corporate sector, whether it's blue collar or white collar, labor shortage is a common theme. There's a higher propensity for those companies to look at AI solutions that replace labor without creating labor problems, because our labor problem is not workers complaining, it's not enough workers. So it's not a politically risky move. Whereas if you do this in some of the markets where you don't have labor shortage, you end up creating more unemployment, which have different social repercussions. Japan might be actually a good playground to experiment with those solutions without creating additional social problems. China is actually a great company for developing AI, but the problem is if they bring too much efficiency, they will be expanding the unemployment in China. But luckily, we don't have that problem in Japan. So I think that's a different aspect. And you know what's happening with Tokyo Stock Exchange in the last few years. Obviously, right now we got a little bit of impact from the tariff wars, but overall, we've had very strong recovery of Japan's stock market. Partly because now some of the money that used to flow to Hong Kong and Shanghai are now coming to Tokyo. So there's like a redirection of the international capital flow. But at the same time, if you look at many of the Japanese larger corporates listed in Tokyo Stock Exchange, many of them have record profit years. And one of the things people know is that public companies in Japan are sitting at highest cash level ever. Most of those companies are not heavily leveraged like their US counterparts, so they are sitting on cash. Their business for the moment is okay, and they are a pile of cash, but they all face this labor shortage problem. So we think they are very good captive customers to provide the new generation of AI or maybe robotics-based solution that basically saves labor. We do have a very good environment for startups who are providing such services.
Totally agree. I'm actually on the record for a few years now saying that Japan shouldn't do much in migration because this lack of labor creates the outside pressure.
I do actually disagree with that one. We do need more skilled labor.
Yes.
I don't think we need to keep importing factory workers because a lot of factories are going to be automated, but we do need more skilled professionals to move to Japan. There's a great opportunity. I have actually heard from some well-known US AI startups who raised significant funding. They wanted to hire more talents from China because China has produced many AI scientists. But US work visa, H-1B visa, has been very difficult to get, especially if you're from places like China. Companies want to hire those talents, but they can't bring them. Some of those companies are now setting up shop in Tokyo because Japan actually has more favorable visa program for engineers and developers and even entrepreneurs. This is actually a good opportunity for Japan to absorb some talent. And if you look at history of Asia, Singapore has really done well attracting international talent. And previously, Singapore didn't have any tech scene, but now they become kind of hub for Southeast Asia. And we believe maybe there's an opportunity for Japan to do its own version. The big difference is Singapore, many companies register their entity in Singapore, but there's no market in Singapore. It's too small. But Japan, we do have this big domestic market. This is actually a good opportunity. I'm pro immigration in terms of us bringing in more talents to Japan.
It's taking the cream from the top in a way and doing this selectively. I say this with a European background. I don't think you want to do in Japan what happened in Europe in 2016 and so on. These uncontrolled, we need more people type of things. You need more skilled people. And the rest, I think, if you take a strategic consultant and you put them into any of the big headquarters without any concern for social implications, I'm absolutely convinced you can cut out 30% of the workload just by efficiencies. These people could be doing something else. And that's essentially what you're saying with automate it, digitize it, and bring in AI. You don't need that many people. You've been very successful in recruiting LPs that are governments or government-sponsored organizations in Japan and in Korea and Taiwan. Does it change the dynamics of your investors? Maybe I'm thinking about this like corporate VC. Yes, you want a financial return, but you also maybe want to benefit from these startups in your company. And so the government-sponsored organizations, they want an ecosystem. So is maybe the ecosystem for them as important as a financial return?
For the most part, our government LPs still require decent financial return because at the end of the day, they are trying to grow the money that they have. They are managing sovereign wealth fund. The financial return goes without saying. However, there are some additional benefits they're all looking for, which is regional economic development. One of the themes that's common thread from our South Korean, Japanese, and Taiwanese LP is that they all want to create this kind of new startup ecosystem in our neck of the world. Europe has done much better because you have more integrated policy, regulations, and market. Some of the European companies be able to create European-wide businesses more rapidly. Especially as I see this in areas like FinTech. Europe has now unified open banking access, which allow startups like we have some French FinTech startup that's now working on top of 200 European banks. That's not possible to do it in Asia today. But we do have specific governments, as I mentioned, Japan, Korea, and Taiwan, who want to see richer ecosystem. We also have the same vision. The problem for many of those countries is that if you're Taiwan and if you just focus on Taiwan, the market is too small. So as a Taiwanese government, you need to figure out, okay, how can I have our Taiwanese portfolios expand to some of the neighboring markets like Korea and Japan? Same with Japanese or Korean startups. So they all have this similar vision of creating their local champions to go international, which is also our core thesis for Headline. We think that you get more value if your startups are operating in one market. And so basically, we try to leverage some of the government's initiatives for our advantage and actually for our portfolio's advantage. For example, in IBS last year and this year, the Korean LP is bringing up a bunch of Korean startups to Japan. This is great because we are now creating them a one-stop access for Japanese market for investors and potential partners, maybe for customers. And we want to do this in all directions. Ultimately, we don't have EU yet, but at least in some of the markets we operate in, we can try to create similar support environment for startups.
If I look at the geopolitical situation that we're in, and probably at least for the next 4 years, the two things that Japan needs or is weak in is one is energy. We're 15 to 18% or so self-sufficient. And even food, which is surprising to many people, is around 38% on a calorie basis. If I was the Japanese government, I'd be thinking hard about if there was a Taiwan war or whatever, where do we get the supplies from? Do you see any of these movements in these areas?
Yes, but they're a little bit different department from the people we work with because we are part of startup venture ecosystem camp. However, in Japan, there are separate government agencies that are looking at things like food and energy self-sufficiency. And this is a moonshot type project, but Japan is actually one of the leading countries for research relating to nuclear fusion. France is strong, China is also strong, but Japan is also strong. About an hour and a half away from Nagoya, in the middle of nowhere and up on top of a mountain. There, Kyoto University has established one of the most advanced nuclear fusion facilities in Japan, where they have now the world record sustained nuclear fusion reaction. That kind of thing takes a lot of capital, way more than typical VCs like us can provide. Ultimately, we think these kind of technologies, if successful, can become one of the, maybe not the only, but one of the key solutions for Japan's energy independence. Of course, there's other things like geothermal energy, which is also great for Japan. We are sitting on top of a volcano. There's a lot of energy below. These are important themes, but it's more deep tech, and our current fund is not set up for that, but we are having some internal discussions on maybe creating a separate initiatives to go after such opportunities. That requires different type of funding and investment framework. You need more patient capital than very impatient VC capital.
I'd like to pick up on one topic that came up in your Sushi Tech panel. You and your panelists described it as being aggressive. I would even go beyond that and say you need to, if I look at some of the US unicorns, you need to be a jerk to be successful. Uber is breaking all the rules. Zuckerberg doesn't care about any privacy rules. All of these don't pay any taxes in Europe. That gets all booked through a Dutch entity. You need to be really not a nice person, apparently, to be super successful. Where are the not nice Japanese people that come to the fore?
That's a very interesting question. We do have our share of not nice people, but some of the aggressives definitely need to be matched with the right opportunity. So if you don't, you might just end up having more petty criminals. If you look at the current generation of mobile gaming industry, we have had some moments where it has been a big problem. That also helped drive a lot of early innovations. Now it's regulated, but maybe on a different segment. Japan originally was the leading country for crypto exchanges. Remember Mt. Gox? Since then, we of course regulated and we have some interesting policy wins. For example, when FTX went down, only country where FTX users were fully protected, got their money back first was Japan, because unlike other regions, Japan already had this mature regulatory framework, which helped FTX users in Japan to help their crypto assets recover. That was one example, right? Japan actually did have CoinCheck and others that suffered from early crypto hacking attacks from North Korea. At the end of the day, these people who actually pushed the frontier helped us create the current regulatory environment, which ultimately led to consumer protection. So we do have some share of it, but not to the same scale, say, the likes of Meta and so on. It's an important opportunity. But one of the issue here is that the people who have crazy ideas require a large amount of capital. You cannot just survive on regional capital. If you were to have those champions out of Japan, ultimately, they need to be able to appeal to not just the local investors, but US international investor base. We are not quite there yet, but maybe I'll put that on Norbert's wish list. We need more naughty entrepreneurs out of Japan.
I have this a lot with being in the fintech space. Even when Revolut came here, it took them 3 years to get the license. So it wasn't like, yeah, you start up, you make some mistakes, and we'll fix it as we go along.
Maybe one thing we do need is a Singapore, like relatively easy to enter sandbox, where when you're early, you can basically experiment as much as you want without having bogged down by regulatory red tape. Maybe that's something we could adopt in Japan to the same extent. There are significant entry barrier that comes from the local practice, right? Here, foreign company comes, opening up a bank account, renting an office, all of things just take so long in Japan. So we do need to loosen up some of the regulations to make these kind of experiments more accessible. There's some work to be done on the policy side. China has been a great experiment, though. Obviously, their government has way more controlling power than Japan or US, but they also allow a lot of new experiments to happen. They obviously come swooping in and regulate like crazy, but in the beginning, they allow a lot of new innovations to happen, which I think China's tech ecosystem benefited from. We don't want Japan to copy 100% of China's policy, but there were some things that actually work for the advantage of a startup ecosystem at some point in history, and perhaps we could learn from that. I remember the entrepreneurs used to tell in China, well, for what's the regulations surrounding your industry? They say, we don't have a regulation, so we can do whatever we want. If the government wants to control, they will create a regulation. But until then, it's open sea.
The other thing that is on Norbert's wish list, and I would appreciate your take on it, is in order to create space for the startups, you also need to deal with some destruction of the old companies to create the opportunities and the free market that then can be taken by the startups. We talked about the startup side quite a bit, and we think there's an inflection point, so we leave this there. But how can we actually get comfortable? And maybe rising interest rates by the BOJ will do part of it, but the zombies that are out there that's still operating but have client relationships that should be transferred somewhere else.
There are certain now powers at work. Tokyo Stock Exchange has pressure on listed companies, and some of them may not be around as a listed company in a few years. So there are some financial regulatory forces at play. But at the same time, even if you didn't do anything, actually Japan has had its own collapse of large companies. Think Toshiba, think Sanyo, all those companies faltered and their assets got acquired by other remaining players. One interesting news I've heard post-COVID now, many of the startups have higher salary ranges than established companies. Already changes are happening, maybe not as dramatic as some of the other countries where you saw the collapse of large companies, but still, I think we are in the middle of that transformation. 20 years ago, young people didn't think startup was a cool thing. That's where losers or weirdos go to. Today, even in popular culture, some of the TV dramas on Japanese TV networks now feature startups as a cool place to work. And that's the kind of the background of the TV drama. 20 years ago, all those TV dramas took place in big corporate, in offices in places like Marunouchi. Popular culture is also changing with the times.
Cool, wonderful. To round it out, you mentioned IVS earlier. We've got IVS Kyoto coming up very soon. What can we expect this year?
This year, we are going back to Kyoto, but also expanding some of the themes. We started maybe 4 or 5 years ago, IBS to become more inclusive and international. The two things we've been working on. One, typically, if you go to Japan's tech conference, especially ones like IBS and our peers, 5 years ago, if you went to IBS, we are very typical of such conference. Maybe 2% of the participants were women. We worked hard, go from there to about 20%. Obviously, we're not at the international level there yet, but in terms of inclusiveness, we are probably one of the top large-scale tech conference in Japan. We've been also working on a similar theme for international participants, and we have reached also similar percentage in the recent years. We want Japan to be less isolated. We want to be more inclusive, both internally and externally. Also, as IBS grows, we also want to start embracing other communities. And the key aspect of this is our use of side events. We started experimenting this a few years ago, but last year we had 300 side events. And in fact, if you put all the side events together, they probably have just as many people as the main conference, which is fine because we want our reason for all those different communities to come together. Speaking to earlier things we discussed, so we are also bringing serious focus around deep tech community in Japan. We've been doing this in conjunction with Kyoto government, who is also very keen on developing deep tech ecosystem. So we're actually having a special deep tech forum within IBS this year. We'll have more of everything, but focus on this kind of diversity and having network of communities, which we have been somewhat lacking in Japan.
It's great. The last 2 years were wonderful. 2 years ago, like one of the side events around Nijo Castle, talking to a young lady, and she was part of the Waseda University Startup Club or so. And
Yes.
Wow. How many people of you are here? 20, 30 or so?
Thank you for mentioning that. A few years ago, we also started focusing on university students, especially those venture-minded, entrepreneur-minded university students, because if you don't work on them, it'll be just a bunch of old entrepreneurs talking to people you already know. So we want to make sure there's influx of young people. And starting 2 years ago, we have created a special pass for those younger members of our venture community. This year, that theme continues. We work with many universities so that make sure not only we're trying to take care of our generation of founders, but the next generation.
We talk a lot about financial literacy at a young age, but entrepreneurship awareness is the other pillar that is sorely needed.
And selfishly speaking, our portfolio and their competitors, they all need more young, talented members. IBS has become a good recruiting ground for those startups, which is great.
I must say, my favorite is your winter event when you did it the last few years. That is more like a Super Bowl show than any Japanese conference. So much energy in the room. That's my favorite event always.
Thank you.
Wonderful. I really appreciate you taking the time. You're off to the races with a new fund, 17 investments already, money to deploy. So if people have courageous ideas that need backing, they know where to find you.
Great. And looking forward to seeing you in Kyoto.
Wonderful. Thank you.
Cheers.